Guys, we have a lot of stocks to break down in this video with little time to waste, 10 in particular, all of which are reporting earnings. So let's just dive into it. If you all find value, of course, hit the like button, make sure to subscribe, and don't forget to get up to 17 stocks from Moomoo. The clock is ticking, guys. Those are down below, and now let's dive into it. So the first one I want to break down is CCL, also known as Carnival Cruise Line, which you guys probably know. This stock before the pandemic was well over 50 bucks a share. I think at one point it was at 70, 80 bucks, something like that, which is crazy to look back on. Let me pull up the max chart and I'll show you guys here. Yeah, it was at 72 bucks a share. And of course, the pandemic happened. Then, well, this thing almost went bankrupt. It went all the way down to about, what, 5 bucks a share. And the funny thing is, guys, I remember at that point when this stock was crashing, I was actually buying puts on it and I was getting really greedy on the puts back then. I bought puts. I think it was at like 5 bucks, 6 bucks, whatever it got to. And I was buying $3 to $4 puts. I really thought this thing was going to go bankrupt, and now looking back on it, well, maybe I was being a little bit too greedy. Either way, guys, we're not going to dive into that rabbit hole in this video, but yeah, CCL was at 70 bucks before the pandemic. Now it's after the pandemic, and we're pretty much out of the pandemic, right? We've been out of it, and this thing is still well under the all-time highs. It is at $9 a share right now, and if we pull up the 4-hour chart, you guys are going to see it is trading in this uptrending channel. It has been for the past couple of months. You guys can see that clear higher lows have been made, and we're currently at a higher low at about 859 bucks, and we're starting to spike back up, off of that trend line here, the bottom of the channel, which is great for the bulls. We have earnings coming up here on the 27th, which is tomorrow on Monday they're usually in the morning. Yeah, they're in the morning, right around 9 a.m. Central Standard Time is when these numbers come out, and they're looking to do EPS of negative 60 cents, so they are going to lose money on the quarter on revenue of $4.33 billion, which is up, get ready for this, guys, that would be up almost 170% year over year. Yeah, big time revenue growth there, which makes sense considering their revenue got destroyed into the, heading into the pandemic, during the pandemic. Now they're crawling out. So they're going to have some, they're crawling out of that hole. They're going to have some crazy revenue growth moving forward here. But at the end of the day, guys, the company is still struggling. Don't get it twisted. The company's still struggling. So negative 60 cents EPS, revenue of $4.33 billion. And mind you, guys, these are all estimates. Keep that in mind. We don't know what the numbers are actually going to come in at, but these are estimates that we're talking about in this video. So let's see what happens here in the mid-9s. I'm going to set my alert at $9.50. Let me do that now. Mark is at we're above $9.50. We'll see where it ends up going from that point, which now that I'm looking at it here on the 5-day, 5-minute, $9.50 roughly was the high from last week. So if we actually break out of that point, if bulls get through that level, this could start to make a move, $10, maybe even higher. So CCL, watch out for it. Another one here is Lululemon. Lululemon reports earnings on the 28th, which is on Tuesday. They're looking to do EPS of $4.26 on revenue of $2.7 billion, which would be up 27%, almost 27% year over year. Not bad there for Lululemon. And this stock, guys, if you look at it here, let me clear the drawing set. This was at 385 bucks back in the beginning of December, so about 3-4 months ago, and now it's at 315. It actually got hit pretty aggressively after the last earnings report, and we're still under where we were after that last earnings report. The stock got down to about 325 after they reported last quarter, and it's been downhill since that point pretty much, right? Now we're trying to claw our way out of this, out of this 320, 325 resistance where I'll set my alert. Let me do that now. Mark is at we're above $325. Let me do that. And if we do clear out of that level, guys, we start breaking the highs from the past couple of weeks, months actually at this point, that's where we could really start to take off. So there again, looking to do $4.26 on revenue of $2.7 billion. That would be up 26% year over year. And if I pull the yearly chart up, guys, you can see this thing's been all over the place the past year, right? I mean, this thing's been very choppy from 410 to 250 back to 390. Now we're at 315. Let's see what we do at about 325. That's going to be a very key level. And one thing worth mentioning, guys, I'm not going to lie to you all. We're going to keep it real here. There is a head and shoulders on the 3-year chart. That is very concerning from the bullish perspective here, right? You guys see the overarching head and shoulders. We have to break that neckline, right around 385. Funny enough, now that I'm looking at it where we failed a couple months ago, that is the neckline right at 385. That's where we failed back in 2020 to form that the left shoulder, right? So it looks like this is still intact. And for the bulls to really gain momentum, of course, they have to break 325 on the smaller time frame. But on the 3-year chart, they got to break 380, 385, and honestly, into the 400s. We'll see, guys. Time will tell. We'll see. This stock is usually quite volatile around earnings season. So keep your eyes on it. On Tuesday after the bell is when Lulu is reporting. We also have Micron, which, guys, if you own Micron, get ready for some rough numbers. They're looking to do negative 80 cents EPS, so they're losing money, 80 cents on the quarter, on revenue of $3.7 billion, which it's a couple billion, right? But that is down 50%. You heard that right. 50% year over year. That is not good at all for Micron. And by the looks of it, guys, we're pretty overbought heading into the earnings report. Not the most, not the best setup heading into earnings, guys, for a company that's projected to lose. They are going to lose money, but have revenue decline by 50%. You can see here we have a clear resistance at about 63 to 65 bucks. That's been resistance since the middle of August. You guys see it here. So yeah, overbought heading into earnings on Tuesday. It's not looking too pretty here for Micron. Even though we are making higher lows, all right, you could argue that that's a good sign for the bulls. But guys, we're heading into a big resistance. Be careful here on Micron at about 63 to 65 bucks a share. We also have Dave & Buster's, arguably my favorite place to go as a kid, that and Chuck E. Cheese. You guys probably know Chuck E. Cheese, Dave & Buster's, great spot to go as a kid, even as an adult, especially Dave & Buster's as an adult. It's actually pretty fun. They have a bar, they have a bunch of games. I mean, you guys have been there, right? And this chart looks awfully similar, even though these companies are not correlated at all. This chart looks awfully similar to Carnival Cruise Line. You guys remember CCL's chart? Let me pull it up. Pretty much the same thing, right? On the 4-hour chart here again, even though these companies are not correlated. We have a clear drop here from 45 bucks to about 33. This thing got hit about 11-12%, or actually $11-12, 27%, and now we're at the bottom of this channel. We're pretty oversold right here at about 34, 35 bucks. So we're looking to do EPS, not where they're looking to do EPS of 73 cents on the 28th, which is on Tuesday, on revenue of $540 million, which would be up 57% year over year. So Dave & Buster's, guys, expect a pretty nice growing number there on revenue, as they are, just like Carnival Cruise Line, crawling their way out of the pandemic hole. And we'll see what happens at these moving averages. Honestly, I'm looking at this thing above 40 bucks. If we could break 40 bucks, I'll set my alert there. Mark is that we're above 40. That's where we could really start to take off. Top of this channel, anywhere from 44, 45, maybe even higher. That's where Dave & Buster's here could be going. So PLAY, keep your eyes on it. We also have Skills this week. Let me pull up Skills, which you guys probably remember from the pandemic, from the bubble of 2021. Skills was one of those stocks. It was up massively at one point. I think it was at 50 bucks or something crazy like that. Yeah, 45 bucks, which is just nuts to look back on now. That was over 2 years ago. Now it's at 50 cents. Just like that, it is at 50 cents, guys. It is officially a penny stock, as anything under $5 is a penny stock, right? And now this is literally a penny stock, as it is in the pennies, 51 cents, which is just insane. So this company, guys, I'm just going to be honest, I'm not looking to buy it. I'm not even looking to trade it, to be honest, but I'm just covering it here because they report earnings on the 30th, which is what? Is that Thursday? Yeah, either way, that's on Thursday, and they're looking to do EPS of negative 12 cents, so they're losing money on revenue of $48 million, which is down 55%. That's projected to be down 55%, which is not good, guys, not good at all. For a company that's a growth company, for them to be down 55%, not good at all. So I'm assuming this is mostly priced in to the stock price. Who knows? I could be wrong, but at this point, guys, this thing has just been bludgeoned. I mean, back in the beginning of February, it was at about $1. Now it's at 50 cents. I mean, in the past month and a half, 2 months, it is down 50%. And that's a lesson here that we could take, right? Even though a stock is down 90% from all-time highs, it could still cut in half, and it could still cut in half from there, and it could still cut in half again. You guys got to realize that it could cut in half until it goes to zero. And then, well, it can't really cut in half anymore, right? So Skills, SKLZ, I'm watching it very, very closely heading into this week. And before we talk about the next stock, if you guys haven't gotten your free stocks yet from Moomoo, use that link down below or go to stocksurfest.com/Moomoo. Listen to this, guys. Once you open up an account, you get 1 free share of stock. Once you deposit at least $100, you get 4 more free shares plus 2 shares of either ticker symbol AI or BBAI, which is limited time. You literally have 4 or 5 more days to do that, guys. And if you deposit at least $1,000, it gets better. You get another 10 stocks, totaling 17 free stocks. So yeah, if you want some free money, you want to help out the channel, use that Moomoo link down below. It's greatly appreciated, guys. Let me know what stocks you get. And with that being said, let's continue on. The next one I want to talk about here is Rumble, which you guys may or may not know. Rumble is a competitor to YouTube, probably not a great competitor because, I mean, let's be honest, YouTube is the top dog. Most people are on YouTube, but Rumble is trying to make a name for themselves in the space. And I actually just started a Rumble account, funny enough, a couple of days ago. Just why not? I mean, I upload videos here on YouTube. Might as well throw them on Rumble as well. There's really no extra work for me. You know, I just have to upload them onto Rumble. So if you guys want to go follow me on Rumble, if you guys even use that platform, go look me up, Stocks Talk Stocks. Go follow me. I just started the Rumble account. But yeah, they're reporting earnings this week on the 30th, which is on Thursday, same day as Skills. And again, this company is pretty much, I don't want to say they're brand new because I think they've been around for about a decade, but just recently, the past year or two, they've been really starting to gain momentum. And they're nowhere near Google, guys. YouTube, obviously, I mean, they barely make any money, but they are looking to do $10 million of revenue on the quarter, which again, nowhere near YouTube, but they're in the baby phases, right? Infant phases right now in the company, and they're looking to lose 2 cents per share on the quarter. So keep your eyes out on Rumble. I mean, I personally wouldn't invest in this thing. Maybe I would trade it. I don't know. But I'm watching it because, again, they report earnings this week, and we'll see what they do in this wedge. You guys can see right now lower highs, higher lows are being made. Let's see what direction we end up picking. So Rumble, again, go follow me on there, guys, if you want. I mean, it's the same content here on YouTube. So, I mean, there's really no need to go follow me on Rumble. But if you want to go support on there, why not? It doesn't hurt. Go follow me on Rumble at Stocks Talk Stocks. And the next one here that I want to go over, which I think has a very high short interest from what I remember, it is EVgo. I think it's up there, maybe 50-60%. I have to go double check it, but very high short interest stock here on EVgo. They report earnings on the 30th, which is on Thursday, and they're looking to lose 16 cents per share on the quarter on revenue of $21 million, up 200% year over year. So yeah, not Rumble. My head's still on Rumble, guys. EVgo is looking to grow 200% year over year on revenue. Pretty freaking good here on Thursday, and they're probably after the bell. Let me double check though. No, they're in the morning on Thursday, so keep that in mind. On the 30th, EVgo is reporting, and the chart is not looking good. I mean, it's clearly in a downtrend. Lower highs are being made. They've been being made for months, but at the same time, we are making higher lows. You guys see these higher lows being made, so let's see what direction EVgo ends up picking. Then we also have another Wall Street Bets favorite, which I haven't really looked at in a while, but we'll look at it right now. It is Blackberry, guys, ticker symbol BB. And I'm not even sure how this company is still around, but hey, the company's still around, guys, and they're looking to do EPS of -7 cents on revenue of $156 million, which would be down 15% year over year. And again, these are all estimates, guys. Who knows what the numbers are actually going to be looking like, but hey, down 15%, not the best, but not as bad as Skills or something like Micron, which both of those are going to be down over 50% on revenue. So we have BB this week on Thursday, and this chart does not look good either, not at all. I mean, we have a descending triangle here, clear as day, which we had it drawn out a second ago. I just cleared this the drawing set. That descending triangle played out. Now we have another one that's formed here on the 4-hour. This is probably going to play out. So Blackberry, not the most attractive chart-wise, but last I checked, I mean, actually, I haven't checked in a while, but maybe they still have a high short interest. Who knows? Maybe it does squeeze. Probably not, though. I haven't really seen any squeezes in this one in a while by the looks of it here. But either way, Blackberry, I'm watching it, ticker symbol BB. And I'm also watching WBA, Walgreens Boots Alliance, which is at $32 a share right now. It was at $42 back in the middle of December. and it's down $10 from that point. In other words, 25%. So Walgreens is in a bear market right now, and there's no signs of a reversal. In fact, we have a death cross here. We're well under the moving averages, and just in the past couple of weeks, Walgreens took the lows out from the beginning of this year. That's not good. The lows were from the beginning of January. Those were $35. Now we're at 32. Not the best sign here. It looks like we are gunning for the lows from the middle of October. So Walgreens is on the 28th on Tuesday. They're looking to do EPS of $1.11, so they are profitable, and they're looking to do revenue of $33 billion, which would be down 0.7% year over year. Pretty much flat revenue year over year. And we also have the last one here, which is FUTU, ticker symbol FUTU, which is actually the parent company of Moomoo, which again, get up to 17 stocks from Moomoo, link down below. FUTU Holdings is reporting this week as well, which is on the 28th. Yeah, 28th on Tuesday. They're looking to do EPS of 70 cents on revenue of $237 million, up 16% year over year. So FUTU looking to grow 16% year over year on revenue, profitable quarter of 70 cents, which is great. That's on top of the 68-cent profit last quarter and 57 cents the quarter before, which you guys can see this stock did very well from the beginning and actually the end of October, early November. It was at $28.30. From that point, it went all the way to $72, and we've pulled back since that point down to about, let's see here, where are we now? $49.50, and we're actually starting to break out ever so slightly. You can see we broke out of the moving averages here as of last week. Now we're testing the top of this wedge, as you all can see right here on the 4-hour. If we break above $50, guys, 55, which was the high from all of February up until now pretty much, we break 55, there could be a lot more upside on FUTU. I'm going to set my alert there. Mark is that we're above $55 a share. So yeah, guys, pretty much that's it. 10 stocks I'm looking at. Let me run through them again. CCL, Lululemon, Micron, Dave & Buster's, Skills, Rumble, EVgo, Blackberry, Walgreens Boots Alliance, and of course, FUTU Holdings. So that's pretty much it, guys, for the video. Those are the main stocks I'm watching this week. Let me know what you're watching down below in the comment section, and feel free to smash that like button and subscribe to this channel and my second channel, Stas Talks Money. If you guys didn't know, I have a second channel where I talk mostly about money, personal finance, general finance, so check it out, link down below, and join the Patreon if you guys want to keep in touch with me throughout the day. You want more one-on-one access, you want to see my Patreon portfolio, be a part of the Discord, see my charts and thoughts throughout the day. All of that's on Patreon. And don't forget to get up to 17 stocks from Moomoo. That's limited time. You have a couple more days left. Link down below. And with that being said, I'll catch you guys in the next video. Peace out.